Welcome to Trading Nation. I'm Sarah Eisen. They say if you don't make mistakes, you don't make anything. Our next guest has the proof. He is the author of Big Mistakes, The Best Investors and Their Worst Investments. Michael Batnick, Director of Research at Ritholtz Wealth Management, joins us now. So thanks for joining us. What are some of the common investor mistakes that you're laying out here?
Hey, Sarah, thank you for having me. So there are many common mistakes that investors make. I would say probably the most common is overconfidence, where we all think that we're above average investors, which obviously cannot be true. So we overestimate our ability to beat the crowd, and then we also overestimate our ability to tolerate risk.
And then you also have here anchoring to purchase price. What do you mean? What's an example?
All right, so you buy a stock at $100, and then it goes up to 101, or it goes down to 98. You view that stock through the prism of what you paid for it, $100. But stocks don't care that you own it. It doesn't matter what you paid for it. The $100 purchase price, or whatever price you paid, is completely irrelevant. And having that as an anchor is a really pernicious mistake that a lot of investors make.
I thought this was an interesting stat. JP Morgan, from 1980 to 2014, 40% of Russell 3000 having a catastrophic 70% drop that they never recovered from. So how do you take that price out of mind and avoid that kind of drop?
Well, you can't, and it's not just the lousy stocks that go down. The best stocks of all time also get crushed all the time. That's not an exception, that's the rule. So over the last 10 years, pick any of the best stocks, Netflix, Apple, Amazon, Facebook, it doesn't matter. They all get cut in half. And unfortunately, in real time, of course, we have no idea whether we're holding an Amazon or a GoPro or a Fitbit.
What about personal experience? Why do people take the wrong lessons from what they've experienced in the past?
Well, past is not prologue, and of course, the problem with experience is that sometimes you learn the wrong mistake, and you have this scar tissue build up of just the market is out to get you, so you blame the Fed or you blame short sellers, or you blame the investor base, or whatever it is, and investors often don't take accountability for their own actions.
So what's the biggest mistake that you see being made out there now?
I would say, at all-time highs, it's easy to get complacent, and past behavior probably is a really good indicator of future behavior. So if you were too nervous in February at the bottom, when stocks were in a healthy correction, obviously didn't feel healthy at the time, but if you were too nervous, and probably you owned too much stocks, and if you weren't nervous, then you probably could own more stocks. So past behavior in terms of how you behave is probably a good indicator of how much risk you should take going forward.
All right, well, check out the book, Big Mistakes, The Best Investors and Their Worst Investments. Michael, thank you.
Thanks for having me.
Michael Batnick, Ritholtz Wealth Management. Thank you all for watching Trading Nation. I'm Sarah Eisen. We'll see you next time. Hey traders, did you like that video? There's more where that came from. Scroll down and click on the links to the right of your screen. We publish new videos and commentaries from our experts every day. And don't forget to follow us on Twitter @Trading Nation.